VCs back founders with big market, scalable ideas, unique advantages, strong teams, and proven traction for huge returns. How precisely does demonstrable traction influence a VC's investment decision? And what are some concrete examples of that?
So traction is essentially quantifiable evidence that your business idea has its own worth and is generating momentum and that your hypothesis about market demand is correct. So what this means is that it's data that tells investors that people want what you're building. It validates your assumptions and de-risks the investment for VCs. The more traction you have, the more leverage you have in negotiations and the more investable you become. There's many different types of tractions, but traction is what allows anybody in the world to stand up and say, VCs, look at my company, look at how well I'm doing, and VCs are going to look at you and are going to invest in your company because traction at the end of the day is the key to unlocking venture capital. So I'll give you some examples of traction, which could be customer or user acquisition growth. So if people are interested in signing up for your product, they're willing to download your app, for example. Consistent month over month growth in active users or signups or customers. So if you're growing every month at a incremental rate of, let's say, 10% weekly, this is something that can be incredibly compelling for venture capitalists. For revenue generating businesses, it's pretty straightforward. If you're doubling your sales every quarter or you're achieving specific monthly recurring revenue MRR milestones like uh, or $1 million in ARR or annual recurring revenue, for example, these are really strong indicators if to VCs that people are willing to pay for your product and that you're able to grow the number of people that are willing to pay for your product. It tells VCs that there's something there that they should invest in. Another thing that can be a good validation, especially at the pre-product stage, is pre-sales or pre-order. So if you can show a vision to a prospective customer and people are willing to give you a portion of that price upfront, that tells VCs that there's real demand for what you're building. And they also look, VCs will look beyond just user numbers. They want to see how engaged those users are. This could be about how long they're using your app, or whether they're using it on a daily basis, or if they're active on a monthly basis. And how quickly are people adopting new features, or how likely are your existing customers to refer to you new customers. All of these are indicators that what you've built is something that generates demand and traction. At the end of the day, VCs want to see how well your product can solve a problem for the market. A well-received minimum viable product with positive user feedback, strong retention data, and low churn is ideal. And if you have organic growth where people are visiting your website and downloading what or using whatever service you're offering, that to the VCs shows that this is something that is getting some potential, that is getting demand. And if I can invest some capital into this business, this can grow and become a larger and bigger scalable company.
If you found value in this episode, make sure to just subscribe or follow, leave a comment, or share it with a friend.